So welcome to this video in which I will analyze the performance of Apple shares and the implications to the broader stock market in the US. Um, so as you see, like the stock has fallen by about 24% this year alone. And a closer look, we see that it's actually down by about 23% from its highest level this year. This means that the stock is in a bear market. A bear market is defined as when a stock falls by about 20% from its highest point in a certain period. And also, we see that the stock the stock has moved in line with the broader stock market, as we see that the S&P 500 has also fallen by the same range. And a closer look, we see that the stock has a very close correlation with the broader market. As you know, Apple is the biggest company in the US in terms of market cap, and so it has a very big weighting on the S&P 500. So why has the stock declined that much? So number one, there is expectation that the company's sales will decline this year, like the growth will not be very big this year. Number two, we have the issue with currencies. As you know, the US dollar index has risen by about 20% this year alone. It has risen against currencies like the Japanese yen and British pound and even the Chinese yuan. So what does this mean? This means that Apple did not change the pricing of its products like iPhone 14 and iPhone 14 Pro Max. They remained the same in dollar terms. But when you come in the UK, you see that iPhone Plus goes for £949. So £949, that's about 1060 US dollars. Now, when buying it in the US, you'll find it that iPhone 14 Plus goes for less than that amount. And the same thing goes for the Japanese model. In Japan, it goes for 134,800, 134,800 Japanese yen, which is equivalent to $906. So it means that people in Japan are paying almost 20% above what they paid for the previous version. When now the other thing we see is that Apple recently downgraded told their manufacturers to reduce the number of iPhone 14 that they are producing. And as you know that iPhone 14, Apple makes a lot of money from the iPhone. Now, when we look at the chart itself, no, before we look at the chart, let us look at what analysts are expecting. This is data from marketbit.com, which is very reliable. Companies Credit Suisse, they recently reduced their target from 201 to 190. Barclays, the same. Bank of America, the same. Bank of America, okay, that's a, but we saw an upgrade from Rosenblatt and UBS, like that. So the overall analysts are a bit concerned about Apple going forward. Now, when we look at the daily chart, we see that the stock formed what looks like a triple top pattern. This means that it struggled to move above this level, and this level, and this level. The neckline of this pattern, in my view, is around $129.36. Now, in price action analysis, a triple top pattern like this is usually a bearish pattern. And then when we come and we enter the moving averages, we see that the stock is actually below the 50 and actually like 50 and 200, 50 and 200 MA. It actually formed what we call the death cross, where the 250-day moving average make a crossover. So this is the death cross here. Here it is. So in my view, I expect that Apple shares will continue going down. I think we are in a bearish trend right now, and this view will be confirmed if the stock drops below $129. Now, if this happens, we can now estimate how much the stock will fall. So we can measure the distance from here to here, and we see it's about 28%. And then we can now measure about 28% from here. So we measure another 28%, and we see that the stock has a high probability of going to $90 per share. Now, how if this happens, this will be confirmed when this happens. But if the stock manages to move above this level of 155, I think now it will invalidate the bearish trend. Thank you for listening, and let me share your thoughts and comments.